Hey everybody, it's Timmy. It is Sunday, March 5, just coming on 7 a.m. East Coast time. And yeah, I took this picture today as we took a walk outside the property and decided we were going to climb the little mountain that was next to us. And this is the view. It was pretty nice. You had a nice breeze. Yeah, just an amazing smell off the ocean. So yeah, in a couple more months, I'll be able to do that walk every day. So, look, we're going into the full moon. Full moon window is wide open, and we just had that 6.3% drop, 6.37%. February 2, March 2. And on Friday, we had that from the low on Thursday to the Friday high, 3.06% pop. So, we're going to make this really easy, and this is the review for the week.
You see MACD, you see RSI, 200, VWAP, you see all of this. But if you notice, MACD looks like it's curling for a buy. RSI looks like it's curling for a sell. We are overextended with the 200, looks like it might come down. We are above the VWAP. All four are giving different what? Indications. And you wonder why you're confused and completely thrown off. Jay, why'd you do that? That's what I'm showing you. And this is why traders fail. This is it. Literally, all four are giving you different signals. So when we live trade tomorrow, we're only using support resistance. Boom.
Okay. I, I, I've watched that a couple times and I laugh harder each and every time I watch it. But all right, so again, here coming into this, all right, February 2, we knew we were going up. We hit it. We knew we were getting short. That was why we were buying the March 10 puts, knowing that we were getting the full moon on March 7th. Those 410 puts and 404 puts on SPY deep in the money as we got that drop there on Thursday, 39.28. And again, the big number here is this 40.57.79, and I'll cover that in a little bit. But again, it's a 3% run that we just had coming off of that. So I'll bring you here really quick, coming back over here, and we've got this trend, all right? And the trend has been very religious, very religious. Let us down a little bit in the middle of last week because we were in that chop, but it's been very religious where we get that pop, that 1% pop, we get a minus 1% drop the following day. Didn't get it last week after the Monday. 39.42 we were looking for. We only got 39.69. The next day, we got the 39.39. What we should have gotten on Tuesday, we got on Wednesday. On Wednesday, nothing to break, no positive movement up or down, really, really choppy. And then plus or minus 4 sessions from the full moon, which is on Tuesday, falls within that window with that Thursday low of 39.28. So, going into this entire month of February and prepared already for that drop that we were going to get, the view had continued to be that we would get the drop here in February, and then after this drop that we got in February, we were heading up into the 4,300s. And I'm not going to take that off the table, but I got a lot of doubt. A lot. And the more and more I look around, the more and more it starts to say, we're going down to 3,800, 3,750. The more I look around, the more it starts to say that. And I'll bring you just into this one little segment here in looking at this month, right? This month of February. How it's just continued gap downs, and more importantly, these closes below the open consistently until we got those 2 green days here on Thursday and Friday. Now, we already know, for everybody that's been around for more than a month, you don't get 3 green days in a row. 3 green days in a row, it may happen once in a while, but it doesn't happen. Uh, Again, these closes below the open, I had to go and look back, and again, it's right here in December where you were getting these closes below the open. It's back here in September, really prevalent in October as we were going down to that big low at 34.91. But even more so in September, after we had that little bounce, we were just closing constantly red, 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 different weeks, but consistently closing red. And it all is starting to look a lot more like the February top was the August top, which was the March top, which was, I'll show you here. All right. Bring you over here because we got a few things to look at. But again, this was your 2-week period. We had that gap down over the weekend after OPEX, where we closed at 40.7909. We opened there at 40.5235 and immediately dropped below that 40.20 early on 2 weeks ago, Tuesday, after that holiday weekend. Boom, 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 playing ping pong. Then spent a day down here a week ago Friday under the ping pong area. Came back up, gapped up on the Monday, ping pong, back again to ping pong, 40.20, 39.80, using that 50-day moving average. And then last week on Wednesday and Thursday, we got our drop that we were looking for. Why we were able to get that trade of the week spread, because we were looking for 39.10, 39.20, plus or minus 10, potato. Got it perfectly there on Thursday. That's why we had that great spread trade there on Thursday. And the follow through here on Friday after we popped through 40.20, that's where it started to get a little bit oh shit. Now, this is what I mean by oh shit. The 50 retracement to the February highs is right here at 41.68. Now we know we got the gap to be filled. Okay, the gap's going to get filled. 40.80. It one way or another, they're going to fill the gap. Gaps don't like to be left alone. So 40.64, 40.61, right there. We've got that gap at 40.79. Got the gap below here at 39.81. We don't have any gaps that are existing, okay, until we start going back here to way back in November, which was the CPI pop, which is down here in the 37.65 area. So again, not going to go out there and start saying, yes, we are undoubtedly going down to that, but there's a lot of signs that are starting to point in that direction. And this, just from a Fibonacci point of view, is definitely pointing at where, okay, you've got your 1, 2, 3. This is your 4, and now you're due to get your 5. And your 5 could bring you here to 3,800, could bring you down to 3,750. That's looking at it from this point of view only, okay? Everybody is very well aware, undoubtedly looking for that 4,300, 4,350 as we go into the summer. Where we are right now from a technical point of view, it doesn't fit. And this was the very first signal that I got, was how we came down to 1811 here on the VIX on Friday. The low of the day on Friday was 1816. 1811 got tagged. No. So again, that is my big oh shit, we are in trouble. And again, just to make it a little bit more simple, where we came down to here on, when was this, Thursday? Friday. We broke the August low. Now, I want you to take that into consideration. The August low on the VIX is where the SPX August high is. You know what happened in August. The VIX April low. This coincides together with the March SPX high. So again, looking here at our full moon track record and seeing as how everything has played out so perfectly with the full moons as everybody looks around, Right over here, you had your full moon in December, and then you got the Powell pop when Powell spoke, and then the move down harder. So again, right inside that window, worked out great. 4091, 4100 was where we had topped out, and we had been topping out ever since back there in September. Full moon is coming here on Tuesday. Now, while you sit there and giggle and say, this stupid motherfucker with his full moons, what kind of bullshit is this? Yeah, why don't you take the time yourself and go back and chart the full moons? Just go back 3 years. Go back and see where your full moons are over the last 3 years. That's it. And you're going to see every one of these full moons, plus or minus 2 or 3 sessions, 4 sessions at the max, is going to fit right inside the exact bottom, the exact top, each and every single time. This was the only time it didn't work, was here in October of 2021, which, if anybody remembers, as we knew we were starting that final 5th wave, that was an incredible move from October all the way up there until November. That was an insane move that we had gotten there in 2021. And that was what started telling us, yes, this is the end. The end is coming near. Start of 2022, this thing's going down. Didn't expect it to go down as big as it went. But again, here you are with your full moons and seeing how your full moons coincide with where your lows are. Now, since we're here on August, this is where I want to draw your attention. So I'll bring you back here onto a shorter time frame. And this here is really where I'm looking right now. Here's your August full moon, your August high. Then you had your dip and your drop. And then your full moon came right here. And then you got your harder drop there into October. Here's your dips. Okay. Here's your January dip. And then the retracement back to the 50. Popped a little higher than the 50. But yeah, your 50 your retracement back to the 50. Now you got to remember here, back in this time, people didn't believe. So you had a dip. People didn't believe. So you had a little bit of euphoria up there. Some of you probably know people that were buying Tesla at 400 back at that time. 50 retracement. And then you fell lower. Here's your March high. All right. Here's your March high. And then you had your dip. And then a very quick retracement back to the 50. And then obviously your move down that went all the way down to June. From the end of March right there to the middle of June. 1,000 points. Now here's your August. Here's your August move and your bottom. And then your multiple day retracement right back to the 50 from the high. And then very obviously your move down from August. We're right there. We're right there with the dip, the little bounce, the move lower, and now we're moving back to that 50 retracement. 40.6180 is the 50 retracement. 40.79 your gap fill. Now, I identify as a man. I have the equipment of a man, so I work like a man. I'm not a woman. If I was a woman, I'd be able to do everything. So with that, a very, very close colleague of mine decided, you know what? You need to see this because this is something that you may know of already. You may have already had it in your chart, but it's being spoken about. SPY SPX. History suggests that the market is bottom based on this simple 200-day moving average envelope signal. As everybody knows, we were getting long last week when we were playing the bullish puts because we were using that 200-day moving average down at 39.40 in order to protect us. It worked. The bull thesis invalidates with a close below the bottom of the 3.3% envelope. He goes on to say, this is hard data. It's not my opinion. If it upsets you, go ahead, get mad at the last 28 years of price action. And he's right. And although I'm not able to get a good zoomed in version of this is very much why I've got my 4,300, 4,325 area that I'm looking at as we progress forward. But at the same time, there's more than enough warning signals that are saying you better be a little bit smart about this. And where he's talking about with that 3.3% is right here, what we pointed out, and that's that 40, 57, 79. So the bull thesis would invalidate if you want to go ahead and talk some garbage fucking technical, but it closed above. You know what? By all means, go right ahead. That 40, 57, 79 also coincides back there at that 40.60 low, which was back here in February 10th, where we had spoken about before. We need to get a close above 40.60 and not break it in order to start defending that we do have a bull case and we are going to be moving higher. Too many warning signals out there, I tell you, and especially, like I say, this VIX. This VIX is out here, and a lot of people are going to say the VIX is broken. The VIX was broken 3 weeks ago when the institutional traders were doing 500,000 contracts on one individual strike on SPY. They're not doing that anymore. And if you want to talk about institutional investors, Carl Icahn has not sold his short down at 39.50 for next week. And you've got the JP Morgan multi-billion-dollar caller, which has to have SPX below 40.50 next week. So there's a lot on the table going out here as we're heading into Jerome Powell. We're heading into OPEX, which is not regular options expiration. It's quarterly OPEX, quad witching OPEX, and that is massive. So VIX 1811, the full moons, looking at that September move, looking at how these dips bounced very quickly back to the 50 retracements before heading lower, I got no choice except to really start going with what I'm looking at. And what I'm looking at, which again, over here, I showed how the true strength indicator had crossed over bearish, same like we had over here at the August top, same like you had over here at the December bounce, same like you had over here off the March top, same like you had over here on the January top. It's crossed over bearish middle of this month, and that is a very strong warning signal for further downside, at least from where we got to at 39.28. Now, again, we knew we were going to get the bounce because we were oversold, and the bounce has almost gotten us overbought because it happened so fast. Come over here onto the weekly, and once again, showing here on the weekly, we had those three red candles in a row, and that was why it was very easy to be bullish going in that bullish spread for the SPX last week as the trade of the week, which, as you all saw, paid out full credit as much as 300%, a little bit more, a little bit less, depending on your timing on the entry. We had 4 red weeks over here in December. Here again is August, where you had your 3 red weeks, your green week, your spike to that 50 retracement, which was the beginning of your 3 weeks down. Then you had your bottom there in October. And again, here was your 7 weeks in a row over here in March. Very, very odd thing to take place. And I've already gone back and shown you everything as far as how it looks from a wider point of view about getting 3 red weeks in a row. Here's your 3 red weeks in a row right here. This is your weekly, where, again, you're not overbought, you're not oversold. We were already overbought, which was another reason why it was very easy to get short. But the weekly was overbought over here in August, equally as it became overbought here in December. So again, another warning sign about being aggressively bullish just because we have a full moon. True strength index, not crossing over as of yet on the weekly. Give it a little bit of a dip down to that 37.65, and it's unfortunately going to cross over, which when the weekly crosses over, that's when you start looking for the big bounce. So this is what I'm looking at right now. All right. 99% chance we're dropping below 4,000. And I'm talking about this week. In fact, I would almost go out and say it's going to happen tomorrow, but I like much better Jerome Powell. Jerome Powell is going to be coming out for us. Where is it? He's coming out for us on Tuesday, and Tuesday is the Jerome Powell day. It's a written statement, and then all the questions and answers by the House of Representatives that you guys vote for. Please, please let AOC be on the table, on the board, whatever it is. Please let AOC be there and ask questions. Their questions are fucking ridiculous. They ask stuff for their voters. You know, stupid, ridiculous shit. You can almost see Jerome Powell's face like, are you fucking kidding me? But he's got to do it. That's his job. So Tuesday's the big day. You get the written statement. You get a couple of comments that come out early. It's after the market's open. And then you go into question and answers. That goes until lunch. On Wednesday, it's the same thing, but in front of Congress or the Senate or whatever the fucking political bullshit it is. It's the same garbage. It's the same thing, just different questions and more bullshit from the people that are asking questions than the actual questions. So I'm giving a 99% chance we're getting below 4,000 this week. I'm getting a 95% chance we're getting below 39.82 this week. From a wider point of view, using the full moon, as of right now, I'm giving a 65% chance that we're breaking below that 39.26 low that we put last week, which means we're going to be heading down to that 38.50, which is the bull market line, plus or minus 20%. Right there where we opened the year 2023, and it opens up for that gap down there at 37.65, which also fits into your mathematical equation of a roughly 300-point month. I'm giving a 35% chance that we're going to be continuing higher up to that 42.25 area. 42.25, 42.50, again, mathematical, but at the same time, what's telling me that you have a chance is the US dollar. That's the only thing telling me that you got a chance. US dollar got overbought last week, and as you can see here, it's on a decline. Just looking at this strictly from a technical point of view. You can see here you had your big A wave down. You've got your double top resistance here right around 105.50. You can see where 105.50 is back over here going at May and June of last year. You've almost got your head and shoulders. And yeah, the dollar declining. I want you to understand that when the dollar declines, it means that you guys are fucked. You're dropping. I mean, the dollar drops. That's like, 2008 kind of shit. So it's not a great thing that you're going to get a drop in the dollar. But yeah, come back over here and look at the dollar from a weekly point of view. Again, oversold on the weekly. You had a big buy divergence on the weekly, so obviously a move to the upside. This 5% move that you got from 168 up to 105, starting to get a bullish cross over here on the true strength index on the weekly. And as you can see here, being overbought, this thing loves to be overbought all through 2021, 2022. So again, that's the only thing that's giving me any kind of real confidence to say you got a chance. You got a chance that you're going to be heading higher. But a lot is out there that is pointing for a much greater move to the downside to around that 38.50, 38.38, very, very possibly down to around this 37.50 area, fill that one gap and call it done and go back into this absolute chop which has just been chopping for months, going all the way back to May. All we're doing is chopping around for almost a year, chopping around. So that's what it looks like right now. And, if you want to go out and see other ways that could be, Tesla 30-day. This is just looking at the 30 days. Here's your 90-day. Coming off that 101, right back up here to 200, over 100% on that move. NVIDIA. New highs on NVIDIA on Friday. Again, 100% move. A lot of space to be taken out on some of these big names. Any one of these big names gets a crater. And again, over here, that 157.50 top over here on Apple, pushing right back up here at 151. You get a drop on Apple from this 151 area down to 140, even possibly down to that 133. That's easily, 500-point move on the Dow. Come over here on the Microsoft, and again, same thing with Microsoft. This is the Microsoft earnings, but yeah, clean. 266, absolute top. You can see you're right over here at your October highs. Just over here at the October highs. Again, same thing. Higher lows, definitely higher lows, very much following the SPX from the movement. 233, drop from 255 to 233. You're already, SPX is down below 39.26. So, your other weight, your other major weight, Google. And here's Google already pushing down to the November lows, the October lows. And this is your major weight. So the last one that can do anything for that would be Facebook. Oh, that's right. Facebook's not a ticker anymore. Got to type in Meta. And you still got your earnings gap to be filled over here on Meta, which, again, right back up here to this major area where you're up over 100% from the October lows. So there's a lot that can really take place here when we're looking here at these full moons, but you can see these patterns. I'm not drawing these to try and sell myself on an idea. You can see these patterns. You guys all saw those white ones. Now I've gone in and I've drawn these yellow ones so that you can see where we're at. I tell you, I give it a much stronger chance that we are going to be heading down during this course of March until we go into April than I am giving for the upside movement. So granted, we already got 100% on those SPY calls. We're already looking at some SPY puts for this week that I was throwing out in the alerts on Friday. 400 at the price that they closed, which was $2.05 they closed at. The gap to fill over on SPY is back at 397. Right over here at 397 is the gap to be filled. So you just do the math on those. 400 puts, 397. 400 minus 397 is $3. You fill the gap back here to 397, you're at 50%, even if it takes until Friday to do it. If that move comes down faster, again, this is one of the things about puts, right? That move comes down faster. 405 down to 400, 399, down to this 397 gap fill area. You get the move down here on SPY. You get the move up here on VIX. You get the move up on VIX. Your pricing increases on your options. So even you're moving in the direction of it, you're getting an even more accelerated version on the pricing of it because of the increase on the VIX. So I'll leave you with this once again.
You see MACD, you see RSI, 200, VWAP, you see all of this. But if you notice, MACD looks like it's curling for a buy. RSI looks like it's curling for a sell. We are overextended for the 200, looks like it might come down. We are above the VWAP. All four are giving different what? Indications. And you wonder why you're confused and completely thrown off. Jay, why'd you do that? That's what I'm showing you. And this is why traders fail. This is it. Literally, all four are giving you different signals. So when we live trade tomorrow, we're only using support resistance. Boom.
Listen, guys, have a fantastic Sunday. Enjoy every bit of it. I have a couple of one-on-one calls with some of you guys later on today. But yeah, message me privately, message me all week. Anybody that wants to get on a one-on-one call during the course of next week, early in the mornings, just drop me a message. I'm happy to get. Have a good one.